Hi, hello. I'm Srinivas. Today, I'm going to talk about a macro view of Indian equity markets. What is this market capitalization and what is this GDP? That is gross domestic product. Are they connected? So that is what we are going to explore today. Currently, the Bombay Stock Exchange market capitalization is around $4.2 trillion. $4.2 trillion, which is much, much higher than our gross domestic product, which currently is around 3.49 US dollars. Now, this USD 4 trillion mark happened much earlier for the markets than for GDP. We always thought that it is GDP which will go further and then market capitalization will follow. Now, in this case, the market capitalization has gone far ahead and GDP is now following it. Today, India is number five in the global market cap. This is after USA, China, Japan, Hong Kong. Likewise, if you talk about GDP rankings, we are number five there too, after USA, China, Japan, and Germany. Now, the big question that arises is that is there a correlation between GDP and market capitalization? So let's talk about what is market capitalization. Very simply, the definition of market capitalization is the number of shares of a particular company into the current price level of that particular share. So when you talk about, let us say, market capitalization of, say, a company like TCS, we're talking about the shares which this particular company has issued into the current market price. Therefore, when we talk about the whole market capitalization of the full market, then we are talking about all the companies listed in that market, their shares multiplied by the price of the share as on that day. That is market capitalization. GDP, I don't have to explain because gross domestic product in the simplest form is the total income earned by all factors in a particular economy. And when we talk about factors, we already know what are the factors of production: land, labor, capital, enterprise. So the question is, can there be a correlation between GDP and market capitalization? So let me give you a brief context before which I take up this particular issue. Now, latest data points indicate that India's GDP growth is going to be about 7.6%. Of course, this is much, much above than the consensus estimate. The Reserve Bank of India, if you have read the latest monetary policy, has also upped the GDP growth projections for the full financial year 24 to 7% from 6.5%, which it had earlier estimated. Now, this is what is the GDP growth. Now, how does GDP increase? How does GDP grow? That is going to be our first question. And then we are going to say how GDP growth is going to affect market capitalization. Now, for GDP to grow, to increase, two of its important components must go. The first is private consumption, which constitutes about 56 to 60% of the GDP, approximately. Secondly, private investments, which is around 28% to 30% of the GDP. Right? Now, these two need to increase. Now, consumption will increase only if the income of a person or a population or that populace increases or its wealth increases, because you will agree with me that If you are of the opinion that your wealth has increased, automatically you will go in for more consumption. Now, if this increases, your consumption will increase. If your consumption increase, automatically the growth will also increase. So growth will increase. Why? Because there is an increase in aggregate demand in an economy. So if the aggregate demand increases automatically, therefore, you can be sure that all the companies, all the activities behind that will automatically grow. So in short, we can say that aggregate demand would increase only if the consumption increases. So it's a sort of a loop system. When you come to market capitalization, we know that it is a sum total of a company's worth as determined by stock market. So when I'm talking about market capitalization, as I earlier defined to you, that it is the total number of shares multiplied by the last quoted price of a particular share. This is nothing but a company's worth. So when you talk about market capitalization, it's a sum total of company's worth. Now, when we talk about sum total of company's worth, and when there is a GDP increase, when there is a GDP growth, does it affect market capitalization? So let us slice the market capitalization. Today, retail investors hold about 10% of the total equity, which is around $400 billion. Promoters of the company hold about 50% of the equity, which is around $2 trillion. Remaining are held by FIIs and many other segments, including the government. Now, a cursory reading will therefore obviously mean that if the market capitalization increase, it will automatically increase the domestic demand because that feel good factor amongst the investors would automatically be there, whether they are promoters or whether they are retail investors or whether they are FIRs. The consumption would increase because the consumption in the first phase would increase for domestic demand. And of course, if the wealth increases substantially, there is going to be a demand for discretionary goods as well. Now, when this happens, when the demand increases, automatically this would profit the companies. In other words, it will propel the profitability of the companies, hence the growth of the companies, hence their share prices, and hence the market capitalization. Now, when you come to GDP, GDP consists of service sectors account for 52% of India's GDP, while industry sector contributes about 24%. So an increase in market capitalization will lead to GDP growth, just as increasing GDP growth will lead to an increase in market capitalization. So clearly it's a virtual cycle, very much correlated. But you may say GDP is dependent on the income of a particular population, whereas market capitalization is dependent on the price of the particular share prices. And share prices are based, it could be a value which is imputed either by the investor or or it could be an interaction of supply and demand. It could be anything. So we can safely come to a conclusion that market capitalization and GDP are very much correlated. So if the government announces that there is going to be an increase in the rate of growth of GDP, you would find that almost immediately our share market picks it up and it bumps up the price of many related shares, right? So trust you all have been able to understand the connection between market capitalization and the GDP. And hopefully, I will be meeting you next once again with a new topic. Thank you. Bye bye.